Well, good afternoon, everybody. This is the Options Alert Service update video for the SMBU Options Alert Service, and I'd like to welcome everyone to our newest update today, July 17th, 2020. Before we get started, I want to point out that SMB Training is not a broker-dealer. We're doing these webinars for educational purposes only. Today's webinar does not contain any live positions. Everything is hypothetical and therefore not subject to the market factors of liquidity, slippage, and commissions. I also want to point out that options trading is risky and you shouldn't expose any of your capital to options trading until you have gotten a full understanding of how options respond to varying market conditions. Following this alert service is something that should be done very carefully on a minimal amount of capital for a long period of time, as you do not want to expose much of your capital to options trading until you fully understand how they respond to varying market conditions. All right, so I would like to go over the trades that we have on right now. We actually have 3 trades on right now, which is very unusual. We've got the July, August, and September Rhino. And I want everyone to understand why we were willing to be in a 3rd trade while we have 2 others open, because normally the maximum number of rhinos you will have open will be 2. And the reason is this. Let's go back. This is our July Rhino trade. And what I'd like to do is go back to, let me see something here. Okay, yeah. I'm sorry, that was a sort of a double slide, but anyway, no harm done. We're going to go back to June 29th, which was the last date of our video update. And I want to show you where we were on the July Rhino trade. And I'm going to be pulling that up on OptionView software in a moment. Just bear with me while I get this to update to the June 29th date. All right, so here we were, and the trade at that time, pull this over here now so you can see it. The trade at that time had a, was in the following position, which is that, let me just scroll this up. I don't know why I'm having trouble finding the strikes. There we go. Okay, so I just got to pull this down here. Okay, so the strikes were as follows. We had a 5 lot at 1180. We had a 2 lot at 1170. We had a 2 lot at 1150. We had a -10 at 1140, and we had +5 at 1090. So that was as of July, June 29th. Well, since that date, and here is sort of to give you a sense of the risk graph of this trade. The minimum that we could win on the trade to the upside was $145. And what had happened was the market had pulled back and then rallied again substantially from I guess the 1140 area or so up to 1420. So that's a big move. That's almost a 300-point move on the Russell index. That's above 20% of its value. And so depending upon where you measure it from, if you measure it from that 1140 area, it's probably closer to 30%. But anyway, so there was a very large move up. But because we are getting credits on these rhinos, it doesn't matter how far the market runs, we're going to make some money on the trade most of the time. And so the great thing about the Rhino is, while it's not necessarily hitting home runs right now, we're having a steady group of wins because we are being able to sell these rhinos at a credit. Normally I have to buy them. We're actually selling them at a credit, and those credits are keeping us afloat. We're hoping to make a lot more, but at a minimum, you know you're going to have a win on your hands, most likely if the trade is sold at a credit and the market starts rallying after that. Now, so what happened was, it was July 2nd, and I made the decision that I wanted to put on the September trade because let's face it, this trade's going nowhere. Unless there's a huge pullback in the market, we're going to make our 145 bucks on it. And I wanted to get into a trade that I thought would have, more potential without closing this, because there's a factor in trading known as slippage. And what slippage is it's the cost of actually moving things around, closing one position, opening up another position. And every time you do it, if you don't have perfect execution to get the mid price, you are going to lose some money in the process. It's like slipping out of your pocket. And that can get to be a substantial number if you don't watch it. So my decision was, in getting out of this position where we probably were going to make $105 or so, was it $145? Do we have at least $40, $50 of slippage as we're getting out of it to open up the September trade? And my determination was, yeah, maybe more. In fact, I thought there was likely more, but it's hard to tell, obviously. So am I going to ask our loyal alert service clients to go out there, close a trade for $145 when they started closing it, but by the time they end it, who knows, if there would be any profit left in it at all. So what I decided to do was something I rarely do, but I did it in this case. And I spent 50 of those bucks, or maybe, I guess it was 40 of those bucks, on a one lot down here at 1120, which was a strike that did not exist before. Now, we now have a single extra put. And what that does is very interesting to the risk graph. What it does is it makes the risk graph effectively, in almost all scenarios, no way to really get into trouble here unless you're really foolish and take it all the way out to day 15 and expiration day, and you end up in here somewhere. Well, I'm not going to let you do that. I'm not going to allow that to happen. I'm going to alert us out of it if something like that were to happen. But we're talking about a pretty catastrophic drop in the market. My determination was, first of all, if we did get up to this level, I would close the trade and we'd make a lot more money. We could end up making $2,500 if that happened, if we had a big sell-off, because now we have more long options than we have short options. And that gives us this tremendously helpful T+0 line. So therefore, I decided that is effectively a hedge. If you look at it, for all intents and purposes, this is a hedge, all right? And since we have this hedge on to the downside, there's no reason at all we can't open up the September trade. And so what I did was I effectively turned the July trade into a hedge with a guaranteed profit pretty much of at least $105, and for potential of a lot more if there was some kind of big sell-off, which we're in the middle of a pandemic. If anybody doesn't think a big sell-off is possible, then think again, okay? So as it turns out, today we are at July 17th, and what in fact has happened is that the trade has expired, and we are no longer in this trade, and it has expired at the $105 level. And so therefore, we made $105 profit on the trade, although we sacrificed $40 of it essentially in order to get into the September trade, and have no concern that I was adding up too much capital exposure for our alert service clients who may be trading this live. All right, so that is the July trade. Now we are going to move on to the August trade, and we're going to go back to June 29th. And this trade, let me, before we go there, actually, I would like to explain something to everybody, which is, let's go back, let's look backwards in time on a price chart here, because I want you to see something very important. This price chart here, I'm sorry. This is the Russell 2000 index in the last more than a month. It has been channeling neatly between 1475 area as low as the 1350 area, all right? That's a pretty tight channel for the middle of a pandemic, okay? Well, when that happens, you're not gonna have a lot of adjustments on your Rhino trade, because the Rhino if you're not moving down and you've sold your Rhino at a credit like we did for August, excuse me, July, August, and September, and I believe earlier than that, I have to look back, but certainly July, August, and September were all sold at a credit. When you're selling a Rhino at a credit, then under those circumstances, you are pretty much guaranteed some kind of profit to the upside, even though it may be minimal. Well, at the same time, when you have a channeling situation like that, you're not going to need any adjustments on the upside of this Rhino, and I'll show you why in a minute. And secondly, it's going to appreciate nicely because this is a positive theta trade way out beyond the tent, and therefore it continues to make money. And you'll see this in a fairly dramatic fashion right now. So let's take a look at our August trade right now, and you'll see that the August trade, what had happened was, since we got together last on June 29th, the market had pulled back at one point, so we end up down here at this 1330 August Rhino, and we have a credit. I'm sorry, I picked up both trades at the same time. Now I've got only one, and we've got this credit of $250. So we're pretty much assured our $250 profit if the market continues to rally. And we do not have any kind of a Greeks problem. The theta is positive. The delta is not even 2. And so everything is great on this trade. And so as a result, we are just sitting there collecting theta. Well, on June 29th, we had a $150 profit. Now let's move to today, July 17th, and we will see a very good example of what happens when the market barely moves and you're in a positive theta position. And let's look at that right now. Right now, this position is up $650. It was up, what was it before? 250, I think. It's now 650, and it's barely moved. It's barely breaking a sweat. And the reason for that is this, and this is really important for everyone to understand. Every time you see these lines going up, basically, it means we're in positive theta territory, and the trade continues to make money if the market were to, channel around in this area. Now, eventually, the theta will drop down to below 0. That's very late in the trade. We're in day 35. We have anything to worry about. We still have an ability to make $2,500 on this trade if we get a pullback. That would be really good luck if that were to happen at the right time. But I certainly think there's a potential if we get some kind of pullback without too big of an increase in volatility. We could end up pulling $900, $1,000, $1,500 out of this trade. That's possible. I'm not saying it's likely. I'm saying it's possible. We will manage this trade to continue to make it positive theta, so that if it starts really running out here, there comes a point where it actually will turn negative theta, and we would need to do something, which is probably going to be to pull these wings in if there's enough time left on the trade. All right, so that is the August trade. And then finally, we're going to move to the September trade. Now, the September trade, we had a little bit of bad luck on. I think we're going to be okay, but it had sort of a rocky start. And let me explain that to you. So, sometimes with trading strategies, the timing, just isn't right for something the way the trade is designed. And so there was a pullback after we put the trade on, and we put this trade on July 2. Remember July 2, that's the date I turned that July trade into a hedge, therefore giving us an ability to enter this September trade. And so on this trade, we got in. It's July 2 now. It's day 78. July 3rd was a market holiday. Otherwise, I would have waited till July 3rd to put this on. That would have been day 77, which is traditionally when I start a Rhino, but there's no absolute about that. And so we got into the trade, and at that time it was a 1470, 1430, and 1370 broken wing butterfly. And then on July 9th, we had a pullback, which required us to move the trade down. And so by the end of the day, this 1420 centered Rhino. We'll see in a minute as option view updates. This 14, whatever that was, 1430, I don't recall right now off the top of my head, but it has now been rolled down here. Okay, it looks like we waited till July 10 to reinstate it, I believe. I am sorry. I should have marked that date down. Yeah, here we go. It came back in July 10, and we had a roll down to the 1350 level on this trade on July 10. And so on July 10 now, the roll down is showing us that we're up 60 bucks on the trade on July 10th. And what has happened since then, though, is that the market began to rally. And hang on one second. I want to make sure that we're not picking up some of the P&L from the other trades. Yeah, okay. So this is showing a small gain as of July 10th. Well, since then, the market has rallied a bit. It's now up into the 1475 area, I believe, today. Yes, 1474. And the trade is now, hang on, we'll get over here in a minute. And the trade's up 60 bucks as of right now. So there's been no movement in it. We're still positive theta. And so this is where we are on the trade. Now, we have a $110 remaining credit on the trade. So even though we had to roll back and take a $165 loss, when we did roll back, we only gave up some of the original credit that we received for entering this September trade. And actually, let's go back and give you that number. I should have in this presentation earlier. My apologies. I should have done that before I skipped over to this current date. So let me go ahead and do that for everyone. And you'll see it wasn't, when I said bad luck, it was, you know, the rollback ended up, that pullback ended up to be temporary. And so you kind of wish it hadn't rolled back, but you have to follow your rules. And that's what we did. So yeah, the original Rhino that we entered into on July 2, that had a credit of 275. So we basically gave some of that up for this roll down, which, you know, if you had it to do all over again, you wouldn't do it. But, you know, just as many times in these situations, you're very happy you did do it. And so you can't think that way as a trader. Well, I wish I hadn't done it. Well, maybe you did it for a very prudent reason that in that particular case didn't work out, but in other cases would have been, you know, exactly what the doctor called for. So here we are. It's up. I'm sorry. Where are we? Why are we in this very strange look here? 1 second. And that's because we're okay. So here we are. So our remaining credits 110. It's still comforting to know that we can rally up to the moon and we'll still make at least 110 bucks on this trade. But you know, we are very, very much in early days on the trade. We could end up back in here. I mean, it's only, you know, the Russells lost over 100 points several times in one day since the pandemic started. So please do not discount the possibility we could end up back down in here in a hurry on this trade. But I'm not saying that's either likely or unlikely. All I'm saying is it is possible. So that's where we are. All three trades are, you know, looking good. Comfortable with all of them. I'm always comfortable with the Rhino. It's just that kind of strategy. And just to do a quick recap, since we have started to do the Rhino trade within the alert service, we have had the January through July trades of this year. That means when those trades expired, we have made $2,955 on the alert service trades, and we have August and September both doing well. So we're hoping to add to that total before the year is out in what I think most people would consider to be a pretty challenging year from an options income trading standpoint. So we're holding our own. And that would be it. So I want to wish everybody a wonderful weekend. Have a great weekend. Stay safe as always. And hopefully we'll all get through this in one piece, and the U.S. economy will come roaring back, and we'll be, in great shape for great things into the future. So have a great weekend, everybody, and we'll talk to you soon.